Now, let's talk about bonds payable. Bonds are long-term debt instruments like term loans and notes except that they are usually offered to the public and sold to many investors. So based on what was stated there, bonds are long-term. In the context of accounting, this simply means that it's non-current. So normally it is collectible or realizable, or we can use this more than 1 year if it was a debt when we are in liability section. So it was a payable beyond 1 year basically. Now let's go back to the definition of bonds payable. If we say debt instruments, it means it uses evidence or proof that there is a creditor-debtor relationship in the lending transaction. The creditor here is the investor, while the debtor is the borrower. Bonds is intended to be broken up into various subunits. Like for example, 1,000 each, which can be issued to a variety of investors. So it is like a share of stock where we can issue shares of stock to a variety of investor. So it is also like a bonds that we can also issue to a variety of investor. So now stock versus bonds. So if the corporation want a additional capital or funds, the possible thing that they can do is to issue a stock to increase their capital. But if they don't want to issue a share of stock, pwede naman nila i-consider ang pag-issue ng bonds, kumbaga mangungutang sila sa corporation. So the meaning of stocks is an equity instrument carrying ownership interest. So when we say equity instrument, this is a evidence or proof of ownership interest. So if you have a shares of stock, that is your proof or evidence that you have a interest into a corporation, kumbaga meron kang pag-aari sa korporasyon. While bonds is a debt instrument with promise to pay back the money with interest, so ibig sabihin naman nito ay utang tulad ng nabanggit ko kanina, debt instrument which is the proof or evidence of creditor-debtor relationship in lending transaction. Now, as the return stock is dividend because you earn a dividend income kapag may nag-invest ng share of stock sa isang corporation, the corporation should pay the investor a dividend income. While bonds, so again when we say bonds, it is a debt. So when you invest in bonds, your income here is the interest dahil ito nga ay utang. So when in a return guarantee, stocks is not totally guaranteed the return. While in bonds, the return guarantee is guaranteed because it was a debt. Because debt is one of the one that we prioritize to pay before the others. In additional benefits, in stock you have a voting rights, while in bonds you don't have a voting rights, but you have a preferential treatment when bonds mature. Like what I have said earlier, mas unang binabayaran ang mga creditor kesa sa owner kung kaya't meron siyang preferential treatment. Now, let's move on to accounting for bonds. Bonds are accounted for in much the same way as notes and loans payable. However, bonds normally are long-term, bear interest issued at a premium or discount, and tail transaction cost. So bonds is almost the same to notes and loans payable in terms of accounting. Kasi nga, ang bonds payable is an example of a financial liability, and the initial measurement of financial liability is fair value minus transaction cost. Transaction costs and the issuance of bond issue costs are included in the carrying amount of the bonds and amortized using the effective interest method. Transaction costs are deducted when determining the carrying amount of the bonds payable. As what it's stated here, transaction cost is deductible. That is why fair value minus transaction cost. Now let's proceed to our example for us to be able to understand more the bonds payable. For example, on January 2023, Gyuko Company issued bonds with a face amount of 5 million for 4,800,000. The bonds mature on December 31, 20x5 and pay annual interest of 10% every December 31. The entity incurs bond issue costs of 473,767. The effective interest rate adjusted for bond issue cost is 16%. Prepare all the journal entries during the term of the bonds. So again, bonds payable is an example of financial liability. So equal to fair value minus the transaction cost. So we already have a transaction cost amounting of 473,767 pesos. While our fair value is 4.8 million pesos that already indicate in the problem. Dahil kapag walang fair value, tayo mismo ang magkukompute ng fair value using the present value factor. So since it was already indicate there, we don't need to compute for our fair value. So 4.8 million minus to the 473,767 is equal to 4,326,233 pesos. So this is the initial measurement of our bonds payable. And our face amount is 5 million. So we have a discount or net discount of 673,767. So this is already inclusive in our bond issue. And to simplify our accounting for bonds payable to any transaction cost or bond issue cost, ilalagay na natin siya sa net discount. For our example number 2, on January 1, 20x3, Akaza Company issued bonds with a face value of 4 million and stated interest rate of 12%. The interest is payable annually on December 31. The bonds mature every December 31 at the rate of 2 million per year for 2 years. The prevailing interest rate for the bonds is 9%. The present value of 1% at 9% is as follows. 1 period of 0.9174, 2 periods of 0.8417. Required, prepare the entries for 20x3 and 20x4. Since 2 years lang naman, kaya di masyadong mahaba ang ating amortization schedule. So now let's make a amortization schedule first. The date next is the paid, which is the face amount times the 12%. Next is interest expense, which is the carrying amount times the 9%. Amortization, since there is a principal payments every end of the year, kaya magkakaroon tayo dito ng principal and our last in here is the carrying amount. Now, in January 1, 20x3, our carrying amount is 4,160,560. Next, in December 31, 2023, so for our interest paid, 4 million times 12%, so we have a 480,000. And for our interest expense, 9% of our carrying amount is equal to 374,450, and for the difference in our amortization, that is interest paid minus interest expense, is equal to 5,550,000. And for our principal, pwede naman nating ilagay ang 2 million na principal, but sa ating gagawin amortization, let's just leave it blank. So now in our carrying amount and amortization, dapat pupunta tayo pababa sa 0. Because bonds is installment and it was serial, that is why dapat pagdating sa dulo or in the maturity date, dapat 0 ang ating amount sa amortization schedule. And for our carrying amount for the end of the year, 4,160,560 minus 105,550 is equal to 4,055,010 pesos. Next is December 31, 2023 pa rin. And well, going to leave blank the following except the principal and carrying amount. And let's put 2 million in principal while in carrying amount. The same as what we did earlier, let's minus the CA into P. That is equal to 2,055,010 pesos. And now, December 31, 2024, so this is the last year of our bonds payable. So it means this is the time na mafu-fully paid na. So for our interest paid is 2 million times 12% is equal to 240,000. So since this is the last year of our amortization schedule, dapat ang balance natin sa dulo is 0. And for our principal is 2 million again because based on the problem, bonds mature every December 31 at the rate of 2 million per year for 2 years. And for our amortization is 55,010 pesos. So 2,055,010 pesos minus 55,010 pesos minus 2 million is equal to 0. And that is our ending in our carrying amount. So, since wala pang laman ang ating interest expense for the last year, so ang sagot dito is 55,010 pesos minus 240,000, so equal to 184,990. Since kompleto na ang ating amortization, now let's make our journal entry. For January 1, year 2023, so we debit cash 4,160,560, credit 4 million, and also credit premium on bonds payable of 160,560. For December 31, debit interest expense 374,450, and credit cost 480,000, and for the difference, there is a amortization, debit premium on bonds payable amounting of 105,550. So of course, may isa pa tayong entry dito which is the record. To record the principal payment, debit bonds payable, credit cash of 2 million. In year 2024, the same lang naman ang entry but different amount. Debit interest expense, 184,990. Debit premium on bonds payable, 55,010 pesos. And credit cash, 240,000. And also debit bonds payable, 2 million. And credit cash, 2 million. So that is for our bonds payable discussion.